Good morning and welcome, everybody. We appreciate you coming back to the Queen Strategy Partners show from the ground up. Real-time issues or real-time solutions. And we're so glad that you have joined us on this Tuesday morning to be able to share the real-time issues with real-time information. Is so important to Danielle Douglas, one of our partners, Nicole Valentine, and myself, Dr. Stacie N.C. Grant. So we're excited about our show today. We're three business women, business bosses that came together because we understood that collaboration can really yield some wonderful results. And someone who knew it said, how don't you all know each other? And we're grateful for that introduction because it led us to founding this management consultancy where we're really focusing on economic development and providing solutions within the MWBE space particularly. So I'm excited to be able to join Danielle Douglas and our special guest that you see will be introducing them shortly. But where I really want you to do is to do me a favor, do us a favor. Let people know about the show. If you're viewing live, share it. Let folks know they can follow us at Queen Strategy Partner, Queen Strategy Partners on Facebook. And we'll also be sharing some other information coming down the line, but it's important to get the word out, especially to MWBEs. So we're depending on you. We're not building this show independently. It's through our collaborative work together, but without an audience and without you being there to receive the information, we won't be able to be as successful as we endeavor to be. So thank you for joining. But I'm going to turn it over to Danielle Douglas, my co-host, and she is going to have some words for you this morning.
So good morning, everyone. I am equally as excited as Stacie to be here with you this morning. This idea about this webinar came out of the COVID-19 crisis. You know, as I shared with Stacie and you all last week, I have been on a ton of different webinars that shares information about the PPP loan, the EIDL loan, but what I didn't see was webinars that really discuss real-time solutions for businesses, not only as it relates to the loans, even though the topic today is going to be about financing, but we wanted to take this as an opportunity to provide you solutions, and we felt that we had the resources, which today is a perfect example that we have Mary and Teresa with us today. We had the knowledge to assist you in this critical time to still be successful. And so today is a perfect example of that. As I shared with you, and I'm sure as a business owner, it's the same with you. You've probably been on a ton of different webinars. A lot of them focus on PPP and EIDL loan. But when you left the webinar, did you still have an understanding of what can I do if the PPP and the EIDL loan doesn't work for me? Maybe I'm an independent contractor, sole proprietor. I don't have staff. I work out of my home. So therefore, I don't even have a lot of additional expenses, as well as I don't have staff. Well, what does that look like? How can I still be able to navigate this situation and get back on my feet? So with these type of gaps that we're seeing in the marketplace as it relates to giving MWBE businesses critical information that they need, we wanted to assist you in that process. So that's what today's topic is about. If you don't have the opportunity to take advantage of PPP and the EIDL loan, which, by the way, the EIDL loan is no longer available. So that means that there's even more of a need to understand what additional resources are available to you as an MWBE business. So with that said, I'm going to pass it back over to my co-host, Stacie, and she could take it from there.
Thank you, Danielle. And I really hope that you also share this out because as Danielle said, a lot of us still don't know what to do. We're seeing all this stuff in the news and we don't know how to apply it. And our two guests today, we're going to introduce them and their expertise in really helping you to navigate what's best for you. It could work for one business, but will it really work for you? So I'm going to start with introducing our first guest. Mary is just a phenomenal individual. We connected way back when, but Olushoga is her last name, and she's nodding. Honey, I found out I have a little Nigerian in me. I did my 23andMe, but she serves as the Assistant Vice President and Senior Business Advisor at Pursuit Lending, and Pursuit was created to assist, promote, and advance the business prosperity and economic welfare of the state of New York by providing loans to small businesses, including startup, early stage, and mature businesses, with a particular emphasis on minority and women-owned business. So we brought one of the experts. I mean, she has experience from JP Morgan Chase to the Columbia University School of Business to global business development. I mean, we would be here for half the show if I read all of her bio, but be very sure that you have an expert that is in the trenches right now helping businesses to take advantage of their loans. And then I'm going to have Danielle introduce our other special guest who I get a chance to work with as well. So I'm just so excited. You know, I'm bubbling over. This is not on program, but hashtag Black Girl Magic. Like, I just love to see all of us do what we do and operate in our space. So Danielle, over to you as we introduce our next guest.
So we have the opportunity to have Teresa with us. And Teresa Martin, from what I hear, she is phenomenal as well. Like you say, we are just the boss ladies in the house this morning. So with that said, I want to formally introduce Teresa. Teresa helps her clients create financial legacies using business acumen as an attorney and a business acceleration and profit optimization specialist. Her unique ability to work in diverse industries and multicultural environments gives her the agility to her ability to find unique opportunities for companies to significantly increase their revenue, profits, and market share. Teresa has been featured in Money Magazine. She is a contributing author of Six Figure Magazine and a co-author of Amazon's #1 bestseller, Entrepreneur on Fire, Conversations with Visionary Leaders, with Barbara Corcoran, billionaire real estate mogul and star of the ABC show, Shark Tank. As the CEO of Generational Wealth Zone, LLC, Teresa is perfectly positioned to help small business owners realize their dream of building a multi-million-dollar business and achieve personal, financial, and professional freedom through her systematic marketing strategies and personal connections with many of the biggest names in the marketing world today. So again, Teresa, we are excited to have you with us this morning, and we're looking forward to hearing all the great knowledge and you sharing out with our audience today.
Absolutely. And then what we'll do on our webpage, because Mary and, well, there's two things. We want to put their links. So make sure that you stay connected to us at Queen Strategy Partners so that we can be able to share with you the links to Pursuit Lending. And Dr. Teresa Martin Esquire also has the Wealth Zone and her information. So we want to make sure that you realize staying connected means you get more information. So you'll have links to them directly. But let's get into the meat of it today. The first question on the table: what type of business most benefits from the PPP loan? So Mary, we're going to shoot that one to you, because what's the real deal? And if I'm a barber, if I'm a cleaner, if I am an author, can I get a PPP?
That's a really, really good question. Actually, PPP was created, the Payroll Protection Program, to help small business owners maintain their payroll and keep people working. As we know, this is one of the crisis that the United States was not really ready or prepared for, and millions of Americans have lost their jobs. And so the goal of PPP is to hire, rehire, and retain staff. So when the first batch of that money came out, it excluded independent contractors and sole proprietors, and mostly focused on corporations. So if you had an LLC, LLP, any form of corporation, S corporation, C corporation. And so what we found, as discussed in the media, is that, bigger companies were the ones who were qualifying. And as we know, as the media exposed some of those bigger companies, they returned the money back. And people are like, what happened to the small business owners? You had the, Chris Root's Steakhouse and, a lot of these other companies, Shake Shack. So that was the issue. Now, and it also excluded the involvement of CDFIs, which is very, very crucial and mostly focused on banks. So the rule for the first batch of PPP said, if you had a lending relationship with a bank prior to February 15, 2020, you can apply for PPP. So what happens if you do not have that business lending relationship with a bank? That means you're excluded as well, even if you're a small business owner. And so a lot of people realized that that was not working, especially for the economy. And more importantly, excluded a lot of groups, like we said, independent contractors, sole proprietors, particularly also MWBEs, because MWBEs are more likely to go to CDFIs, Community Development Financial Institution. So when the second batch came out, the United States Small Business Administration said they wanted to do several things. The first, increase access to capital and PPP opportunities to MWBEs. That's one of the things they focused on. As you know, the media discussed it very briefly. And then they also wanted to involve CDFIs, Community Development Financial Institution. And so that's where pursuit lending comes in. And so those two things changed for the second batch of the PPP lending process. And also, they also included an extended PPP to include independent contractors and sole proprietors as well. So what happened is Pursuit Lending received a significant amount to do lending to members of various communities. Pursuit Lending is a CDFI, or Community Development Financial Institution. And as you said, our goal is to really provide access to capital options to businesses throughout New York State, New Jersey, and Pennsylvania. So we work in those 3 states. My specific portfolio focuses on helping Pursuit Lending to increase the MWBE pipeline as it pertains to access to capital. So like I said, if you are a sole proprietor, now with this second batch, you can qualify and apply for PPP. However, I do not believe this applies for independent contractors. And I should say that there's been a lot of issues with PPP as well, in terms of independent contractors asking the question, should I apply for PPP or do I receive unemployment? Now, that's a whole nother issue. If you do apply for PPP, the average of small business owners have only received funding that can help sustain them for 3 months. So it's not any kind of significant amount of money that will sort of help provide that significant cash flow, especially that in the current economy we're in, people are still not spending. You know what I mean? People are still home. They're very afraid. They're very scared. It's affecting the restaurant industry and all of that. So people are not really spending the money. So small business owners thereby are not expecting the sales that are needed. So, if you are an independent contractor or sole proprietor who would qualify for unemployment, I would highly suggest that you pick that option because it's actually more money than PPP. The average small business owner, like I said, only receives PPP funding for 3 months. And it really ranges anywhere from $8,000 to maybe about $45,000. For a lot of businesses, that's not a lot of money.
So that's interesting because there are a couple of things that you mentioned there that we want to unpack. But I also want to give Teresa an opportunity with what you're seeing. And I'm sure you work with businesses that are developing credit. They're trying to figure things out. What do you see from the businesses that you're working with that could really benefit from this PPP, according to what Mary just shared with the second round?
What I've been seeing is most of the clients that have come to me didn't qualify for the PPP or the EIDL or any other type of alternative financing. Why? Because they're not running their businesses like businesses. All right. So for the PPP, the situation is that you have to have payroll. Right. So the problem is, even when they set themselves up as a single member LLC or some other type of S Corp, they're not paying themselves. They haven't put themselves on payroll. They have not had any payroll. So therefore they didn't qualify. So that's one aspect that I've been seeing. And then the second aspect is financials. They're not getting their financials in order. So the profit and loss statements, their revenue models, everything is out of whack. So this situation has brought to the forefront that we have a lot of businesses that are out there under the flag of business, but they're not running their businesses like businesses. And therefore, they're failing to avail themselves of the resources that are out there. So that's what I've really been seeing. I mean, I have had some people who qualified, but on the majority, Dr. Stacie, and Mary, you probably can attest to this, they didn't qualify because their ducks weren't in order. So that's what I've been seeing.
Can I jump in also at this point? Because I wanted to, address something that you touched upon, Mary, and that is that even if you are an independent contractor, you run your business like that, you may outsource certain things to other independent contractors. They may subcontract under you. And even in that situation, a PPP is not going to work, because even though you're paying them and you think, oh, they may be on technically some type of payroll because I'm paying them, they're not your direct employees. So as a result, the federal government, they are assuming those individuals who are subcontractors under your business, they're going to go after the PPP or the unemployment or whatever themselves. So you cannot even use those subcontractors as being technically part of your payroll. It needs to be direct employees, as I understand it to be, and people need to understand that as well. Am I mistaken with that?
Absolutely, absolutely. That is very on point. Absolutely, I agree with that. And Dr. Teresa brings out very, very important points. So I manage the Entrepreneur of Color Fund, which is a fund provided in collaboration with JP Morgan Chase. That's one of the reasons why I was hired at Pursuit. And that's why, and when the fund started, I mean, it exists in Detroit and in San Francisco as well. My specific geographic location was the Bronx. Now, since COVID, we were able to lend throughout New York City, any MWB throughout New York City. But when I worked in the Bronx, what Dr. Teresa highlights is something that I absolutely had a challenge with, in terms of when you meet an entrepreneur. And unfortunately, the issue Dr. Teresa highlights mostly affects a lot of MWBEs and immigrant businesses. They're not keeping the documentations. They don't have payroll records. I mean, I recently participated in the Freelancers Union webinar on Friday, and people are paying people off the books because they don't want to pay full salaries, and all these different issues are coming up. The issue is, when you do not have proper documentation, if you have any kind of judgments, bankruptcies, or tax liens, it's hard to obtain EDIL money from the United States Small Business Administration when you owe the IRS. That's not going to work. So very, very important. And unfortunately, a lot of these issues affect MWB communities and a lot of immigrant communities and entrepreneurs who are trying to run their businesses, from the plumbers to retail shops, to the bodegas. A lot of people are not keeping the records, the documentations needed. And if you even look long-term, this also affects little things like MWB contracting, because sometimes to do a lot of these contract projects and to be able to execute on them, you need your documentation. If you get a 500,000 MWB contract, or a contract because you're an MWB, Minority Women Business Enterprise, and you're going out to look for financing, who's going to take that risk if you don't have the documentation, your profit and loss statement, your cash flow, your balance sheet? If you can't hire a bookkeeper, an accountant, take the time to learn QuickBooks. But a lot of these issues, as it pertains especially to financial documentation and documentation of other records, certainly affects a lot of small businesses. And I certainly agree. It affects a lot of CDFIs, which is why the involvement of CDFIs like Pursuit Lending is extremely crucial, because we provide sort of pre-loan advisory. We work with people to put their books together. We work with people to put their documentations together. Now, the issue is that a lot of these things take time. And so by the time for example, the EIDL no longer, it's currently closed. There's no more funding available. What's available is money for agricultural businesses only. So by the time you're working with a CDFI doing pre-loan advisory, sometimes those opportunities have ended, they've closed, time has passed, and you've missed out on the opportunity. So I think this is a good time for a lot of small business owners to sit down and work with people like Dr. Teresa and work with people within the Queen's strategy and work with CDFIs like, you know, like Pursuit Lending and really say, how can I begin the process of documentation? It's a very, very important conversation.
And we can't underscore that. We could really talk the whole show about that, particularly, so we might have to do a follow-up, but I want to get back into the fact that if you do get the PPP, there's documentation because you have to be able to show your expenses, correct? So there's an 8-week requirement. I want both of you to touch on that. So those who are fortunate enough to get the PPP, there's another level of reporting or compliance, so to speak, once you've been awarded the loan. So that's my understanding, and I would love for you all to shed some light on it.
Right, so at Pursuit Lending, on Friday, the SBA released how small business owners can qualify for the loan forgiveness part. So now you've received this funding, there's a portion of that money that will be forgiven, and you do not have to pay back if your I's are dotted and your T's are crossed and you follow their rules and you keep all of your paperwork, you know, and part of those rules is 75% needs to be for payroll, and there are other things. So that policy, I mean, up till Friday, we didn't know what the policy was. We just know that there's a loan forgiveness portion. So I think we're still trying to understand the SBA policy process. And I know I've received a lot of documents that I have to go through, but there is a loan forgiveness part that will apply for a lot of small business owners. And I think this is where it's going to be crucial for consultants and for people like Dr. Teresa to really go out there and support MWBE, because bigger corporations like the Shake Shacks and the Chris Roots and all these bigger companies can hire a team of people and say, all you have to do is help us figure out how PPP works. We don't want to concern ourselves with this. That's your job. You know, a small business owner doesn't have that money, doesn't have that time, doesn't have that network, doesn't have the resources. And so in terms of trying to like, oh, what am I going to do? I have to pay my rent. I haven't worked. Where am I sale? You know, in terms of asking those hard questions, you know, in that process, sometimes they forget to dot the I and forget to dot the T. So I can foresee, without the involvement of consultants and CDFIs and community development organizations, bigger corporations are more likely to benefit from the loan forgiveness part than smaller businesses will, because smaller businesses, in the process of the hustling and, you know, trying to live day to day and being worried about so much, they're gonna forget to dot those I's and cross those T's, and it's gonna get them into trouble whereby they have to pay that money back plus interest.
And the big, I want to tag on that, because the big thing that Mary mentioned is so accurate as far as the payroll, right? So the PPP, you get in 2.5 times your payroll for the year prior to the application, right? So we're talking about 2019, right? So now you can use the PPP once you get approved. You can use the PPP for that payroll, mortgage interest, you know, rent, things of that sort that goes to the fulfillment of running the operations and things of that sort, but it deals with payroll because where the people are going to go to work and things of that sort. That 75%, you have to have documentation again, right? So it's still the documentation that you have utilized those PPP funds in the way that it was intended. So you have to have the documentation that you've used that. If you have not, then that will not be forgiven. Then you have to repay back that PPP for that portion that's not forgiven within 2 years at that 1% interest rate. So that's why you still have to worry about dealing with the documentation on how you're actually using those funds, and that you are using the funds in the way that it was intended in that 8 weeks. So I would tell people, go to your CPA, go to your bookkeeper, find out, you know, how you can now make sure that you're paying the things that you needed to pay. That's why we were saying to people that, could you double dip? Right? The big question was, can I get a PPP and can I get an EIDL, right? So the whole thing is, and like Mary touched upon, you know, put unemployment in there as well. So those are the 3 cash flow funding things, right? So you have to think about, okay, so if the PPP has limitations on how you have to use the funds, make sure if you are going to use the funds, use it in the way that it was intended. If you're going to get an EIDL, which is no longer there, but this is, you know, when it was being had, the EIDL, those things are a little bit more broad, right? Because now you can use it for accounts payable, you know, you can use it for things that you couldn't use the PPP for. So if you were going to get double funds, just couldn't be for the same reasons or the same purposes as which you got the other funds. So those were some of the things that people were not really engaged with. They were trying to do these things themselves. They weren't connecting with their financial professionals to help them get their, I's dotted and their T's crossed, and they were trying to do this themselves. And some of them did not get approved, but they could have had they, reached out to get professional assistance to get the documentation that they needed. I told people, make sure you go to your CPA. Don't come to the legal. Legal has nothing to do with you trying to get your funds right now. Making sure you were set up, that should have been happening before that. Now let's find out how we get the money. Go to your tax professional and make sure that your finances is in order and you're under the right structure on how the tax ramifications are going to hit you. So those are some of the things that, I just wanted to add to what Mary was saying, making sure you use those funds so that it can be forgiven. And if it doesn't, then you have a 2-year payback period and it's going to be at a 1% interest rate. So.
And I just wanted to jump in for a second as well and just build upon what you both have just discussed. And that is something really simple that business owners can do, and this is just like a tip, is that they should open up a separate account so that all the expenses and all the monies from that loan, it will assist them in documenting how they spent that money. So that's just a tip. It's not the only thing they should do. Again, they should be looking to resources to assist them, but that's a simple tip that can help in the process. And one of the first things that they should consider doing.
Absolutely. And then that's why this show is all about real-time issues and real-time solutions. That's a real-time solution. Yes. If you get it, open up an account so that you can track it. Not everybody loves to do paperwork. Let's just be honest. That's why we see some of the challenges, in our communities where sometimes not even about paperwork, is lack of knowledge. We just don't know. So having these conversations, we can help MWBEs, because in order to become an MWBE, you have to have documentation, right? So everything is tied together of putting your house in order and, understanding, what that looks like so that you can benefit. So I'm going to combine the next question, and then Danielle has a few that we're going to throw in because we're going deep into this conversation today. PPP is not the end all of end alls, right? It is not the sun, star, moon. And if you didn't get PPP, oh, my business is over. That's not the challenge, right? There are other options. So I would like you both to speak on, if you don't get PPP or you're not qualified for it, what other options are there for businesses in this COVID climate trying to figure out what their cash flow and projections will look like for the rest of this year, moving even into 2021?
Sure. So at Pursuit Lending, like I said, we are a community development financial institution serving businesses throughout New York State, New Jersey, and Pennsylvania. There are options. I manage something called the Entrepreneur of Color Fund, which is a collaborative effort between Pursuit Lending and JP Morgan Chase. And so we are able to work with entrepreneurs of color throughout New York City. Before, it used to be the Bronx specifically. Now we've expanded to throughout New York City to support entrepreneurs of color, their businesses, and trying to figure out how to help them ensure that their business is growing. And what's so special about the Entrepreneur of Color Fund as it pertains to Pursuit Lending is that once you receive funding from us, we just don't let it go. We do something additional. We're able to provide a resource called Consultant Corp, whereby you have a consultant that we pay for that comes into your business that can help you from everything to developing a sales strategy, to helping you with your books, QuickBooks, profit and loss statement, cash flow. So it's a very resourceful tool that's there. There's also the New York City Contract Finance Fund. For those who don't know, Pursuit Lending and New York City Department of Small Business Services has a resource. For example, if you have a contract from any city agency, you can work with Pursuit to receive. Before, the interest rate was 3%, but because it's the COVID time, it's a pandemic, it's something we've never experienced before, the interest rate is now 0%. So we're able to lend up to $500,000. So if you have a contract with any New York City agency, certainly reach out to me and we'll figure out how to fund that. But once again, those documentations are important. Having your profit and loss statement, cash flow, balance sheet. We look at all those things because we make decisions on the sustainability of your business, ensuring that you do not have any kind of tax lien, because we're United States Small Business Administration preferred lenders. We don't work with businesses who have tax liens. So that's very important. Try to resolve that, come up with a plan, come up with a payment system. And we also no judgments and no bankruptcies. But we're certainly looking to work with small business owners. There are other resources available on our website, pursuitlending.com, and we can certainly help you. And in addition to that, US SBA products are still available. So through Pursuit, the SBA is still able to offer the 7A loan products, which is also for startups, is able to offer 504 loan products, which is really for purchasing commercial assets, real estate projects, equipment, if you're looking to grow your business that way. And then there's the community advantage loans that still exists, which helps small business owners within specific communities to hire members of the community and help them, grow their businesses. So there's still resources out there. Not all banks, which is great that CDFIs exist, because not all banks are lending. Some of my friends who are bankers, like at Bank of America, they're not really doing any lending. There are a couple of other organizations that are not lending as well, but we are, because we believe in small businesses. So absolutely, there are resources there.
And I just want to again build upon what you just said, Mary, and give another tip. And that is, you discuss QuickBooks, and that business owners should have that as a resource. So you also discussed the very important need to have your profit and loss, your balance sheet statements. Now, you may have that for 2018 and 2019. You might not even have it for 2019 when COVID-19 hit, because you may not have done your taxes yet. But if you have QuickBooks, you can do your own profit and loss statement and balance sheet. And when things are happening in real time, as Mary alluded to, Teresa, in regards to time is of the essence, the money may not be there, you may need to produce these documents very quickly. QuickBooks gives you the opportunity to do that. So that's where, again, a software resource is critically important that you consider using, so that you can give lenders like Mary that information as quickly as possible.
Absolutely. And Teresa, what about you? What other loan options are available for MWBEs? You do a lot with different kinds. We're going to get into your expertise with credit, but what would you say?
Well, that's what I was just going to say. I said, outside of what Mary mentioned, I deal in the alternative financing space, right? So my space is normally for the small investor who just starting out, don't really have a lot of funds, or the real estate investor who is just getting their feet wet. So you have short-term loans that you can get from private lenders and alternative financing sources, short-term business lines of credit, collateralized, which means if you have some type of collateral, but you have low credit, or you don't have the finances that's coming in that will qualify you from a lot of funding sources. You do have those merchant cash advances, which I'm not a fan of, but I do understand the need to have resources like merchant cash advances. If you are accepting credit cards, Visa and MasterCards, they're high interest rates. So, in any financing tool, I do suggest that you have a financial professional, on your hip, because even when you're trying to get easy loans, you still need to know how to utilize those loans and how to make sure you have a repayment plan, and that you have the business model that is going to get you the return on your investment, so you can do the repay product. So I deal in the alternative financing space when I'm helping people, gather their finances, because they have been in business for either less than 6 months or less than a year, and they wouldn't necessarily qualify for some of the other tools and resources that the SBA would offer. So that's in the space in which I help in that whole business credit space and things of that sort.
Awesome. Well, that was a lot, and I hope everyone took notes. And if you're watching live, I'm going to look for your questions and comments as well. But we're going to move into another part of the questions, and Danielle is going to dive into that while I check and see if you have any live questions that are coming in.
So this question is specifically for you, Teresa, and that is that we know that you have, as part of the services you provide, a 12-point business success assessment. So can you share with us what that is?
Oh, sure. The business success assessment is basically making sure that you are going through the right steps at the right time and in the right sequence in order for you to get funding. A lot of people, as I mentioned before, they go straight to a bank. they don't really understand what the underwriting guidelines are. They don't really know what the documents they need to have, as Mary alluded to, having all your finances in order. You should not really go out and expect to get loans. And we're talking about outside of these other WAVE programs, right? Let's get back to reality, right? So the new normal, right? So we get back to the normal where credit is important, and we get back into the fact that your finances are important, okay? Right now, a lot of things are waived. So in the real world, when you go into a lending organization and you're looking to get financing, they want to make sure that someone else has lent to you, that you are lendable, okay, or bankable, right? So you have to make sure, one, that you have your foundation set up. So the first point that you asked about, Danielle, is do you have a proper entity formation? Okay, if you are sole proprietor, it's unlikely that you're going to get a business loan or you're going to get a business financing, because you're not a business. You're a sole proprietor and you're not set up to protect them, right? So the only thing you have is your personal assets that you can give up, right? So you can get a sole proprietor loan. However, you're going to personally guarantee that. Okay, that's the bottom line, right? You're going to have to personally guarantee that. So we make sure that you're set up properly. That's a step. Okay. The second step is that you have filed the proper documentation with the state, right? Because you have to make sure that everything in decency and order, everything matches. And a lot of times, some people say a corp, some people say Inc., some people say, different things that they call their corporations, and everything has to match. Because when you go to get DMB, Dun & Bradstreet, when they do a match, it has to match. So they're going to go into the database and they're going to see how you were actually formed. So if you were formed as a corp and not an Inc., it's going to be a mismatch. And in some instances, you may not get approved because they can't match you up. Just simple things. So the 12-point assessment deals with your foundation, making sure you are set up, making sure you have a business bank account, making sure that you have an EIN, making sure that you have a website or a web presence that they can actually find out what it is that you do, and that you are not one of these red flag companies. Credit repair is a big red flag. It's going to be very difficult for credit restoration or credit repair companies to get merchant accounts and things of that sort. They got special funds for those type of businesses, guns and arms, things of that, casinos, these kinds of things are on the list. Not saying you cannot get funded, but you're going to be flagged and you're going to have to do a little bit more jumping through hoops to get things. So those are some of the examples of the 12-point assessment, is really just making sure that before you go in to try to get financing, that your business foundation, things that you can control, are in decency and order. And then we go into the credit checks with DMB and Experian Business and things of that sort, and making sure your credit is tight, your personal credit, because the way that you can get business credit is CIA, right? I tell people you got to be a part of the CIA club, right? You have to have good personal credit, or you have to have business revenue, or you have to have assets. So if you don't have the credit, you don't have the business income, or you don't have the assets, it's going to be very difficult for you to go in and get direct financing. At that point, you might need to step back and start building your foundation, and it starts with business credit. So that's what the 12-point assessment is about, Danielle.
Thank you. So I have another question, and it is organic question to come out of what you just discussed, and it's really for you and Mary also. And that is that business credit is very important. But when banks, or I believe alternative lenders, are looking at giving a business a loan, personal credit is extremely important. I believe it's only at a certain point. I think it's $5 million. I could be off with the dollar amount, forgive me, and you could correct me.
No worries.
That they begin to look solely at business credit and no longer look at personal credit. But a business owner is always going to be liable up until a certain revenue point, and that is critically important. So I just want the audience to really understand that although business credit is important, your personal credit is, you have to guarantee that loan, even if you have a corporation, and they need to be clear on that.
And I'll touch on that. with business credit, it's a difference on how you actually structure it. So if you go through the proper procedures, as I mentioned, the CIA, because they're the three ways, remember? The C is credit-based financing. That's the only time your credit comes into play. If we're talking about solely on your business revenue, you can get a business revenue line of business credit that is tied solely to your business, and the only thing that you need is to have $10,000 a month or more running through your business. That's revenue financing. And then the last thing is assets, and that's collateralized financing, which is dealing with your assets. So only the C is dealing with your personal credit, where you have to personally guarantee it. The I and the A is not dealing with your personal credit. That's why I said you have to have one of the three in order for you. Now, with your good credit in line, you can now double the bang for your buck because you got good personal credit. Now you're building business credit, and then you can secure that. But when I'm talking about business credit, I am strictly talking about the credit that is based on your EIN and not your Social Security. So I just want to give a point of clarification for that.
And I think I just want to jump in on that one, because that's part of every business owner's development when you think about access to capital. And we're talking about real-time issues, which is COVID-19, businesses not working, can you get loans, and your personal credit, the CIA, as Teresa just said, and we want you to share how people can get this 12-point assessment that you're sharing. But this is an important topic because it allows the MWBEs to really take inventory, no judgment. I just want to say that we're a no judgment zone here from the ground up, right? We are all in situations that we've come from, that we've learned from, and it's knowledge and the access to that knowledge that helps you to make better choices and decisions. But I bet you some of you didn't know you had 3 options on getting funding. So you have to get something up. If the credit is bad, get some collateral up. Like, you have to figure out a way to navigate these waters so that you can raise the opportunity for you to really be a viable and sustainable business. But it starts with doing the homework. So I love this question and the way in which Danielle has posed it, so that we could all be conscious as MWBEs in a opportunity for millions of dollars to be able to go after these contracts. We won't be able to be as successful if we don't do our due diligence. And
Right.
That's what we're trying to bring forth in this show. So I just wanted to underscore that. Sorry, Danielle, I know you had another question, but I
But
do.
I also wanted to add something before we move on from that point. Is very rarely, I think they're all intertwined, and that's a great one, CIA. Because very, very rarely do you have someone with great business income and a credit score 400. Very, very rarely do you have that. They're all intertwined. If you're doing well in your business, you're paying your employees, you're paying your bills, you're getting those credit cards bills paid. I mean, they're all intertwined. It's usually a red flag when someone's, and I've seen it that low. I have seen it that low. I didn't even know it existed, but I have seen it that low. Very rarely. So when you connect that, when someone really has poor credit, usually they struggle in the business, and what they're trying to do is bootstrap using their credit cards, really trying out there and really stretching themselves thin to the point that they have no income anymore. And sometimes you just have to tell them, go get a job, but that's the reality. When someone is really successful in their business and they have that cash flow, which serves as the business income, the credit usually, at least we're talking 700. I mean, it's a pattern we've seen when we look at a lot of these tax returns as well, because we've seen very successful businesses, great credit, and sometimes we'll worry, like maybe they spend, they're making enough money and they're withdrawing $600,000 in salary. I mean, that's a whole nother issue, but that's more likely to happen versus someone who has great business income and has terrible credit. I think they're all intertwined at some point. So that's what I just wanted to add.
Thanks, Mary. That is absolutely true. And right now you're going to have a different scenario because the credit, obviously people have been late because of the situations that they have it with COVID. I lost my job. I couldn't pay this. So you were going to see a bump. I am waiting to see how the government handles that, because credit reporting has to have changed because the world has changed. And where I was normally paying on time, for 3 months, I couldn't pay anything. Right. Now I'm going to be hit. So I think we're all going to have some issues when it comes to the credit side of what it is that we're doing. And that's like no shame in your game. We're dealing with that.
Yeah, and I think that what we're telling because we have loan portfolios, we have clients that we have served over the years. And so we're offering deferments. We're also calling our clients to tell them to speak with their landlords and advocate for deferments as well. If you can pay, if you're paying 100%, maybe you can reduce it to 25%. Maybe you can reduce it to 50%. Have that conversation with your landlord. If you have a mortgage, have that conversation with your bank or whoever your lender is. That conversation needs to happen so it hopefully may not affect your credit. But if you're just sitting there and saying, I have no job, I have no life, oh my God, and you're not proactive by having those conversations, negotiating deferments, renegotiating your lease, and really being proactive, then yes, it may affect the credit, because there are some landlords who are like, you have to pay me. But if you also take the time to understand what new policies are out there, like New York City Council has a policy that says, if you've been closed, a landlord cannot discriminate against you because of what's happening. You can renegotiate, they can't just kick you out. Evictions are not considered essential right now. So you still have to stay indoors in your apartment, in your house, so there are certain things that you can actually take advantage of that exist to help protect your credit for future use. Because once COVID, ends and hopefully there's a vaccine for this, it's gonna be business as usual, and it's gonna move really fast because a lot of people are holding on to their ideas and their plans, and you don't wanna be that person who's left behind still trying to pick up the pieces. Like we've been saying, take this time to do your documentation, really focus on yourself. How are you gonna grow your business? How can you re-strategize? Are there things that you need to change? Really take this time right now to reassess and assess. But I also think be proactive and have those conversations with your banks, with your lenders, with your landlord, renegotiate, ask for deferments. A lot of our clients, we've deferred them for 3 months. If you're an SBA client, you qualify for the Small Business Debt Relief Program, which allows the SBA to pay for your SBA loan for 6 months. I mean, there are all these great programs out there. You can't just sit there. You have to take advantage of them.
Absolutely.
So the other thing I just want to build upon what Mary said, and in 2 ways. One, tip number 3. Our webinar last Tuesday was the 5 steps to pivoting, finding your vessel. So when we discuss strategy, or Mary just mentioned strategy, please go back to that webinar and it'll give you guidance on how you can strategize in this environment to take your business to another level. So that's the first thing. The other thing, and I want to ask you, Mary, and of course, Teresa, I want you to chime in as well, is what will underwriting look like post-COVID? You discussed about the credit, and lenders are going to have to look at the credit report and things like that differently. So overall, when you think about underwriting, that's an aspect of underwriting. How will that look post-COVID? And that goes into what will make a business owner bankable.
Yeah. So that's a really good question because no one expected COVID to this level or to this extent, to be honest with you. I mean, as early as February, I still traveled, So all of this changes. We've been indoors for some people 2 months, 3 months, if you're fortunate enough to work from home. So it's been a very stressful time. In terms of how this will affect CDFIs, I can speak mostly for CDFI because Pursuit Lending is a CDFI, and we have a lot of partners. I've built a lot of banking relationships with bankers. I'm not exactly sure what will change, but I will tell you what still exists right now. First of all, a lot of banks are not lending. So more people are likely to go to alternative lenders. So certainly documentation. People are going to be focused on how sustainable your business is, your profit and loss statement, cash flow, balance sheet. One of the reasons why, they said, even if you look at the small business debt relief program that the SBA provides, which pays SBA borrowers, it pays for their loans for 6 months. It only applies to people who had SBA loans prior to February 15th, so people are going to be looking at your business sustainability, the type of business that you have. And they're going to be making a lot of those decisions. So it's going to be based on your credit, still very important, protect your credit. It's going to be based on your financials. We look at cash flow. So we're looking at the 5 C's of credit. So we have the credit, we have the cash flow. It's very significant. Certainly we're looking at collateral. That's very, very important, which is the asset part that Dr. Teresa mentioned earlier. And another thing too that we're focused upon is character. So I'm not sure if you've been following the news, but a lot of the Department of Justice is going to be going after small business owners who are misusing their PPP funding. There are a couple of people who have been arrested right now. There's a lot of fraud going on out there. So character is very important. How did you spend that money? Very, very crucial and important. So those 5 C's are going to be important in terms of how, and I don't think that's going to change anytime soon, because that's the core and the basis, at least as it pertains to CDFIs and banks, for which people make lending decisions. Your cash flow, your business income, very important. You need business income to keep paying your employees. You need business income to pay your own bills. You need business income to put yourself on payroll. So if this happens in the future, you have PPP money, so those are important. Your character, very, very important. Do not commit fraud with that money. Follow the rules, have your I's dotted, your T's crossed. Your credit, business and personal credit are equally important. There are a lot of people who come to us and say, well, I have really poor credit, will you only look at my business credit? For us as a CDFI, we'll look at both, because personal credit is a huge form of character. If you make a promise to pay a credit card bill, do that, do just that. Don't renege on your promise to pay a bill. So those are the 5 C's of credit. They're still going to be stand-in. Collateral is also another one, which is related to asset. But sometimes a lot of people do not have collateral. So you should focus on strengthening the other parts.
And I'll just second that. There's really nothing more for me to add. Those five pieces are going to continue, because that's the foundation. And I agree with them. So it's not like, I don't have any argument with them. I do believe, and you can tell a lot about a person by looking at their personal credit report.
Yes.
You just can, so.
I do want to build upon that. And, thank you both for your great answers. You've been a wealth of knowledge, and peeling back the onion a little more in regards to the underwriting. I believe, and please correct me if I'm wrong, that also what will be looked at, and you touched upon this, Mary, is strategy. We're in a new environment. So your market as a business owner, the market that you were providing your goods and services to may not be the same market post-COVID. How are you going to recapture that revenue that you had before COVID happened? And so I believe when the lenders are looking to provide funding sources, they're going to want to see, what are you going to do post-COVID? Because you got to pay the loan back.
Yeah. So
how are you going to bring in revenue to be able to do that? Are you going to tweak your product or service? Are you going to pursue a new market? What does that look like? And how will you be able to project revenue as a result of that? So will that be looked at as well as it relates to underwriting?
Certainly. I mean, this is the time that every business needs to be online. You need to have a website. If you don't have a website, you're currently not in business, because business transactions these days are mostly online, because you can't meet with people in person as much anymore. Certainly certain states who have reopened, the restaurant industry is a huge part of it. Restaurants may have to spend some time trying to redesign their spaces and all of that. But regardless, a lot of restaurants pre-COVID did not do delivery. Now everyone's getting on Dashdoor, delivery platforms, Caviar, and all these different things. E-commerce is going to be a very, very big deal. So if you're a small business owner, if you can develop your website, have someone work with you on developing your website, take that seriously. Your online presence, website presence is going to be very important and very crucial. I think there are certainly certain industries that a lot of investors, CDFIs, and banks will focus on post-COVID. Already we can see the healthcare industry is a huge part of it. People who produce PPPs are going to get special attention, special money, special financing. Anyone who focuses on manufacturing right now. So I think certainly there are specific industries that a lot of banks and lenders will be interested in. But I think all industries are, fair game, but for all business owners to get online, that's very crucial.
And then a second to that, was to make sure that, you know, in your business planning, this is what she mentioned before, what Mary mentioned before, your business plan and your strategy plan and your marketing plan, that needs to be done, period. There should always be a part of your plan that is anticipating a pivot, not a pivot like a pandemic. Who could predict that? But there's always things that happen. So in my business plan, I didn't have to shift too much because I always had another model that I can actually pivot to if this line didn't work. That's why you have multiple verticals. That's why you have things going on in your business where when one goes down, you know, the other one can take its place. So I think that's all a part of the planning process. And I think in small business and entrepreneurship, we really fail to plan. And we really go out there because we have an idea and we can cook well, so we're gonna go open up a catering hall. I mean, that's just what we do. We don't take time to do market research. We don't take time to find out, you know, the things that we need to find out, the viability of the business, the sustainability of the business. And we really, as business owners in our plan, need to know the difference between revenue and profits. Yeah. That's the biggest issue that I have with most small businesses. I'm making $1 million. Yeah, but what do you put in the bank? Because, you know, if your profit margins are crazy, you know, then you can be pocketing at $1 million, you can be pocketing 100,000. So technically we need to understand the difference on how your revenue and your profits go together. And so I think, Danielle, I think part of the pivot plan needs to be really understanding, you know, how to build, grow, sustain, and scale a business. And without a team to help you do that, if you don't have that acumen yourself, you just got to bring on a team. And that needs to be a part of your expense line. Because if you're trying to do this yourself, you're going to miss a lot of opportunities because you're trying to bootstrap in the wrong areas. You need expertise to help you get to that next level. And so that's what I would say as far as, you know, getting involved and pivoting in your plan. So that's a part of your strategy. Your strategy should always plan that I need a strategy.
Absolutely. And I think not having a team is why solopreneurs and independent contractors were excluded in the first batch of PPP, because the government said, how are you guys hiring? You're not hiring anyone. We want to focus on people who have corporations and have hired people. But the thing is, you know, a lot of sole proprietors and independent contractors, they're hiring subcontractors, 1 person, 2 person. But I still think, you know, it's important to have a team. But, you know, unfortunately, a lot of the MWBs are solopreneurs, 1 man, 1 woman shops trying to do everything themselves, even though they don't have the expertise, the skills, or the time. So you have that 1 person trying to be the accountant, salesperson, marketing person, web person, you know, and trying to just do everything. And I think that's a conversation too, as businesses are now required to go online, or it's suggested that they go online now. It's not just about creating a website, but creating a process and a system that allows you to function online, you know, whether or not you're there. And that includes cybersecurity as well. Fraud is going to be a huge issue for a lot of small business owners post-COVID. You're going to have hackers everywhere trying to hack into people's personal accounts, into all kinds of PayPal accounts and everything. So when I talk about e-commerce, it's not just getting online and creating a website, but protecting yourself, your business, and your customers once you get online. And there's a whole process to that. So I think cybersecurity is going to be another huge industry in addition to the healthcare space that, you know, people will begin to focus attention on, because, you know, fraud, people are like, wow, everyone's online. How can I hack into this person and steal credit cards and do all these different things, you know? And I think cybersecurity is also going to be another interesting space to focus upon.
But look,
so I'm sorry, Stacie.
I'm just looking at time. We're having so much fun. I'm like, no, Danielle, we have to do a show on cybersecurity. Like that right there is another.
Oh yeah.
So yeah, we could be here all day. This has been so great. And I know Danielle has a couple more questions as we round out our conversation today, but I hope that everyone listening, you're sharing this broadcast with somebody that you know who's an MWBE who could use this information. We're going to share the links to all of the information and resources that both Mary and Dr. Teresa have so that you can access it, but we need you to share this out. That's why we're doing the show, to make sure that people know about the real-time issues and real-time solution from the ground up. We don't know what's going to happen, but we're going to be prepared when we get out of COVID-19.
And I also wanted to add one more thing, that there are grants available as well. I think I may have shared that with Stacie. If I'm not, I will forward that. You know, you have a grant from Facebook, a grant from FedEx, There are different banks that are providing grants as well. Different community organizations that are providing grants, sometimes up to $10,000. There was a portion of EIDL, the Economic Injury Disaster Loan, that was a grant. So if you can't get PPP or EIDL, try to source or find grants that are available for your business as well.
So I just want to say thank you so much. I mean, in the interest of time, I'm not going to ask my follow-up question, which was really about the profit and revenue that Teresa alluded to, because we know that oftentimes business owners will underreport their profits for tax liability, and then that hurts them as well in regards to loans. But what that says to me is that we should have a part 2, you know, and Stacie and I will discuss that. And I would love, you know, behind the scenes, if we could find out what your availability is, because you both provided such a wealth of information. And we just scratched the surface. I mean, this could have been all day.
Absolutely.
You know, that's how much information and golden nuggets that you provided. So I would love to have you both. I would love to have you both back, so that we can like peel back the onion a little more. But I just want to say thank you for all the wonderful information that you gave the audience today.
It's great. Thank you.
Thank you. Thank you for having us.
We appreciate it. Episode 2, from the ground up, real-time issues and real-time solutions. We're excited. This is the vision. And it's all from collaboration. Once again, 3 different businesses coming together in this MWBE space to provide and add value. So real conversations. Sometimes it might pinch a nerve or two, but we hope that it's in a direction that you're going to benefit from, because you can't fix what you don't face. So thank you so much.
Sure.
And ladies and gentlemen that are watching, thank you for your comments. I see a few people. I'll just shout you out. Adrian, Lewis, Sean, Deborah, Tracy, Regina, Cheryl, we appreciate you being here. Share this out with your audience. We'll be back every Tuesday, 9 a.m. Eastern Standard Time, for another episode of From the Ground Up, Real-Time Issues with Real-Time Solutions, provided by QueenStrategyPartners.com. Bye, everyone.
Bye, everyone.